Okay, here we go. September 2nd, day after Memorial Day. No, Labor Day. Labor Day was yesterday. So it's a Tuesday morning, 6:28. We have 1 minute and 25 seconds left till the market opens. And this is going to be a great day for our tests. This is looks like we're in a gap down on the SPX like 75 points. That's going to be fantastic. See how this thing handles that. So I don't know if you can see these over here. Maybe I'll shift this thinkorswim platform around so you can see the numbers, but the ES is showing we're down 75 points, so I'm expecting a gap on the SPX at the open to be down about 75 points, which will be in this area here. So you can see the pink line's all funky right now. That's just because the market's not open yet. It'll take a few minutes for it to settle in, especially with a big gap down like this. But let's see how this this position here handles that. This is the sleepover trade. Let's see how it handles that gap. 75 points is a pretty good gap. So this will be interesting to see. I think will be cool. We have our hedge on here. Our hedge isn't quite up to the break-even line, but we will see. So we have 15 seconds. Let's see how this thing comes in. I'm expecting the SPX to open around right here-ish. 5 seconds. Here we go. Oh, look at that. Okay, so there's where it opened. Let's check that out. And again, it's going to take a few minutes for this thing to, for the prices to settle in and for this pink line to like look correct on this screen. What happened over there, Connor? My son's playing video games over there. He's beating up the phone. Don't break the phone.
I'm not breaking the phone. My words will break it.
Yeah.
No.
Okay. Let's see. Okay, so the SPX is down to 80. It gapped down 84 points. Let's look at the chart real quick. There it is. This is the daily chart on the SPX. Look at that gap. Yowza. That's a nice healthy gap. Let's see what happens here. You know, so a couple of things I want to look at doing. So this spread here should be a total, probably a total value, right? So we could take that off. Where's that at? I had these, I guess it's this one. Oh, it's at 465, so it's not quite at full value yet. But again, the prices are just coming in. So I'm just going to sit here and wait until the prices settle in. Here's where the SPX is currently trading. Now, if we didn't have that hedge on, which is right here, that's not really accurate. Again, this pink line's all funky, but that wouldn't be nice. Which is why I want my hedge on. Again, the prices are all over the place, so I'm just going to wait here. Looks like we're down 88 points now. Okay, we're down 86 points. The market's been open for about 4 minutes. You can see the pink line still isn't looking correct, so I'm still waiting for the prices to settle in here so we can get an accurate look at this graph.
Order filled. Order filled. Stop filled.
That's my British friend. Good morning, fine sir. I'm going to go check on some other trades. This still isn't, the pink line still hasn't really settled in yet. So I'm going to pause for a second, go do some other tasks. I'll be back. Okay, here we go, 702. That's our update. Here's the, let's see, that's not the current position. Here is the current position. So we've come back up into the 10 a little bit. Look at the chart. There's the chart. So we had this gap down and we've made our way back up. Prices are still kind of crazy and volatile. This pink line doesn't look quite right now, but I think it'll continue to settle in. One thing I'm considering doing is getting rid of one of these condors. Give us a position like this. Just to braze up this lower hedge above the zero line in case we have another drop down. So I'm going to see if I can get this for, I want to keep this upside. So what do I need to do? I want to keep the upside above the zero line. So in order to do that, I need to have, see the prices are bouncing all over the place. It's still wild. It's wild. So I need to get to break even on this upper ledge. I need to at least get 70? Yeah, 70. I need to at least get 70 for this. Let's see if we can get like $1. I need to at least get 70. So let's see if I can. I'm going to try to get $1. The prices are all over the place. I'm not sure why things dropped today. I haven't checked that yet. I'm going to bring this down to $1. I'm going to bring this down to 95. And I'll just hold there. It's really hard to tell what the price really is because things are just so jumpy. I'll move this back to $1. I was thinking if I went to 95, I'd be able to tell if they'll give it to me for under $1, but nothing yet. No dice on that. So I'm going to go to $1. I'm going to let that sit there at $1. So what I'm trying to do is I'm buying just one of these unbalanced condors back. And if we get it for $1, we have $30 profit on the upside. We have 730 in the tent, and on the downside we have 230. So that's a nice trade-off for a big gap down day. If I can get that, if they'll give me that dollar. Come on, you market makers. But currently, our position is like this. Here's our real trade. So I don't know if I've shown what our trade is yet. So this is a trade I put on last Friday. It was a long weekend. And let me just build this out. So I put on 3 unbalanced condors like this. This is on Friday. Throughout the day on Friday I did this. And then I sold two put spreads by themselves. These same put spreads here, I just layered on 2 more, which gave us this trade. This is a new thing I'm working with. So until I finish testing it, I'm not really going to get into it. It's just tweaking the ratios on these, basically, layering in some put credit spreads to see if I can get more credit out of it. And then about 5 hedges like that. And remember when this was put on, we were up in here on Friday. And then I had 3 of these XSPs on to boost this up. Because as far as I knew, we were going to stay up here and go up. But we gapped down. So this is our current trade. And right now I'm trying to get this. I'm trying to take off one of these unbalanced condors for $1. Which would give us that. You can see we have a theta right now of 1,180. So that's where we be as of right now. So let's continue to watch this. Let's see if we get this thing filled for $1. I'm kind of debating whether we should try that or not. But for the time being, I'm going to leave it just like it is. Alright, so I'm going to pause. I'll come back if something cool happens. Okay, so we just got filled on that removal of one of the unbalanced condors for $1. So there's our current position right now. So that just went at $1. So I'm going to lock that in at $1. There we go. So there's our current position. So by doing that, let me turn these guys on. That's a what was that? It was a ghost trade. You guys hear that? Okay, so here's our current position. We're inside the tent. If we take off to the moon, we'll make $30 up here. So there's no risk all the way from here all the way up. There's this, but that's nothing. That's a mere flesh wound. That's nothing to worry about. We have $730 in the tent, and we've lifted up this downside hedge so that if it takes off, crashes down to the downside, we have like $230 from here all the way down to 0. So one thing I want to do is take a look at what if we didn't have that hedge on, what would we look like? So I'm going to take off the one that we just filled, and I want to take a look at this trade without the hedge, as if we had not put that hedge on last Friday. This guy. That's where the trade would be without the hedge. That looks scary to me. I don't like that. So we would be down about $400 without that hedge on. We have a total, again, this is without the hedge. We did put the hedge on. I'm just looking at it as if we didn't, because a lot of people want to trade these without the hedge, including the guy who taught it to me. So if I had not traded if I had not put the hedge on, we'd be down, well, it's bouncing around, but let's say $300 to $400 right now. And we'd be on the slope with a total loss potential of 2,770. We had the hedge, but with the hedge on, we're here, which is bouncing around, but I think it's probably break even, maybe worst case scenario, maybe 100. somewhere between plus 100 and minus 100, somewhere in there. And if it takes off to the downside, we're capped. Well, it's different now, but because I added it, because I took one of these off. The trade as it stood over the weekend, we'd have a total loss potential of 370. But I've removed that risk by just buying back one of those unbalanced condors right now for $1, or selling it out for $1. So now we have this trade. So now we're about break even-ish, and if it keeps crashing, we have $230 of profit potential down here. If it takes up to the moon, we have profit potential all the way up. So it's just a matter of seeing what happens. This is a little bit wider than I probably should have done. I think 15 points wide was as far as I've gone. The further out you can get this hedge, the cheaper you can get it, which helps the overall position. But you can see on a gap down like this is 20 points. Is that 20 points? Yeah, 20 points wide. And this is a little uncomfortable. I'd like for this hedge to be closer in. Ideally, like right there. But those are pretty expensive. So I would say this is a learning lesson to see if we can get maybe come in closer on these. Don't go 20 points. 15 points, maybe the max gap between this structure and the hedge. And of course, as tight as you can get it while getting a good price. Okay, so I'm going to pause the video again and wait to see what happens next. I think I can ride this for a while. I guess maybe potentially the next move would be taking another one of these off. Like so. I'm not ready to do that yet though, but we could do this. This will drape this up. We're still profitable on this side all the way up. We've reduced the profit potential in the 10 to 300. But this is a day that we don't have very often. That 75-point gap down day is a little extreme and is kind of rare. It doesn't really happen that much. So all in all, we're fine. This trade is handling this well, as I expected. That's not on yet. So the current position is this. All right, I'll be back. All right, here we go. September 2nd, Tuesday, 11:16 a.m. The SPX crashed today. Well, gapped down by 80 points. There it is. Look at that. I'm not sure. I haven't even looked yet to see why that was. Maybe it's because it's September. Beginning of September. The summer's over. So here's the trade. This is closed now. We have a total of 5 big bean burritos locked in. This is a levitation trade, baby. 5 bean burritos. Which is not a lot, but it's better than a loss. So there was a big gap down. I'm going to back out of this thing, and so I can go through each of the steps of how we got here. So I'm going to turn everything off. I'm going to go back to the opening trade. This was put on last Friday at market close. So let me turn these on. I'm going to construct this trade as it was built at the end of market on Friday. Those are our unbalanced condors. And remember, when this was built on Friday, we were trading up in here. So just keep that in mind. Where the price is showing right now is not where we were when this was built. So this was on Friday as well. This is 2 additional put credit spreads at the same strikes right there. And this is
Order filled.
Oh, thank you. Thank you very much, fine sir. And
Stop filled.
okay. That's my British friend. Different account. Totally different trade. Okay. So this is our 5 hedges we put on. And then we had these XSP trades hedged on the upside just to give it a little bump. I was expecting to keep moving up. So we had this little thing here. These are the XSP trades just to boost this line up to get us closer to break even. So that's the trade we had going over the weekend. Now something to notice here is that You can see how we got a droop going on here, and that's because of two things. The first thing is because this is too wide of a gap. This is my bad. I was pushing the limits, and as I can see now, this is a lesson learned. I don't want to have this hedge gapped away from or this far away from the structure, because it just creates the potential for a sag here. And the other reason why it's sagging like this right now is because it's 11. It's later in the day. It's in the last couple hours. We have 2 hours left in the day. I'm on the Pacific Coast, so the market closes at 1. So we have 2 hours. So this is so 2 lessons on this. Don't have these hedges closer to the structure. I can see now that 20 points is too wide. I mean, we're not going to have gaps like this very often, but we will have them as we did today. So let's try to get these hedges closer in, tighter. That would solve this sag issue. But the other reason it's sagging like this is because it's so late in the day, so we want to do something earlier rather than later, sooner rather than later, which this was done earlier on. I'm just recapping it now at 11. So, and that's why we're seeing these prices. This is just showing the position as it exists right now at 11. These adjustments were probably done around 9 or 10. So, but those are the 2 takeaways on this. The hedge needs to be closer. Don't have too wide of a gap there. That's going to potentially cause problems. And make your adjustments. If you're in potential hazard zone like this, fix it sooner rather than later. Don't wait till the last couple hours, because you can see it's not at the bottom, but that's a pretty healthy sag there. That's more of a sag than I would want. So I wouldn't want to wait around this long to deal with it. I dealt with this a couple hours back, and when I did it, this sag was not like this at all. It was much tighter in here. There wasn't this much of a sag or this much of a current loss in the position. Let me zoom in a little bit. And again, remember the price was up here, not down here like it is right now. The price was up here. Okay, so then this morning we gapped down 80 points or so. We opened, I think we were even below this where we opened. We gapped down here. Well, you'll see it in the first part of this video. I was recording right when the market opened, so you can see. I think it was in here though. So to get us to where we're at now, what I did was I bought back one of these put condors when the opportunity was correct. I think I did it in the last video I made in this video here, so earlier on in this video. Anyway, this is that. I sold out one of those unbalanced condors, gave us this position, and this is going to be it's not going to be that helpful to see where the price was at the time, but you'll see what was done at least. This trade was never really down more than like $100 or so. This morning it was jumping all over the place, so it kind of showed like different really whacked out prices. But once things settled down, we really weren't at that much of a loss. This hedge protected pretty well, but one of the takeaways for today is that this is just too wide. I don't want to go this wide again. That's dangerous. Even though we're not going to have 80-point gaps or gap downs on these trades very often, still, let's keep that tight. Okay, so today I bought back one of those, or I sold out one of those condors. So I just started to reduce it, and that's basically what I did with this. I just started to kind of carve off pieces one at a time. So the next one here is this. This is I sold out these 2 spreads, or however many there were, 2 or 3, however many spreads were here. We were at full value. We were basically, since we were trading down here, these were at full value, so there was really no reason to leave them on. So I might as well just take all the profit I can get, because we can't get any more. So I took these off at 490. Gave us this trade there. We were trading somewhere in this area at that time. We did get all the way across this span here, and we were trading into this part of the hedge, just barely. And then it turned around. Anyway, so I got those off, and then the next thing I did was the 7065. Where are those at? 7065. So then I started to remove That's right. So we were down in here and we were creeping into this area. So there was some value in these hedges. I didn't remove the whole hedge. I just started to remove pieces, peeling off one contract or one spread at a time. So that's what these are. And here's another one. And then it turned around and it started moving back up. And again, this pink line was not where it's at now. This pink line was nice and tight coming up through here. All right, so then what I did next was, I started to buy these put spreads back in pieces, peeling them off in pieces as we're making our way back up. There's this one. And there's this one. You can see I'm just doing them in pieces. I did 3 contracts to begin with, and then I just peeled one by one off as we continued to move up until I had this position where the worst case scenario at that point was $55, but we had this hedge here. There was some value in those, so I just immediately sold those out like so to get us above break even, just barely $5 above break even, $5. So unless we have this is where we'll wind up today, $5 profit, unless we have a big run up here, which I don't foresee happening in the next hour and a half. Could, I guess, but if it does, we have up to $305 in this area of the tent. So this is a can't lose trade. This is a winner. And there's no way we can lose from this point forward. It's not a lot of profit, but on a day when we gap down 80 points at the open, hey, I'll effing take it.
I'd buy that for $1.